Okay, folks, welcome to Best Stock Charts for the coming week and month. Because we have a new month, happy Labor Day. And to celebrate Labor Day, we are throwing a sale. I rarely provide discounts other than the yearly discount, but I was talked into it. So what I decided to do was to offer a discount, 50% off of our titanium level membership. That is trade alerts, commentary, our watch stocks, and then the silver level membership. That's all of what is in titanium. I'm offering 30% off of silver annual membership and another 30% off of our gold level membership. And with silver, the difference is that you get TrendSpider or Trading Sim. TrendSpider is obviously a product that I use when forecasting support and resistance levels and backtesting strategies. And Trading Sim is also another tool to use historical data to help validate or invalidate a trading strategy that you're looking to employ. Now, gold level, that's a higher level of engagement. You get both TrendSpider and Trading Sim, and you get access to me directly, meaning I will review the symbols that you asked me to review on video. And I'm pretty sure I'm the only one that is out there doing that. So it's a higher level of engagement. Please take advantage of, again, 50% off of titanium level, 30% off of silver and gold level memberships, all on an annual basis. And you may be asking, why only on an annual basis? It's because there are onboarding processes that I have to engage with, especially with TrendSpider and Trading Sim. And we want people that are dedicated. Yes, you get the 14-day free trial offer. By the end of that 14-day free trial offer, you should have a good idea whether or not the program is right for you. So I'm offering it on an annualized basis. So please take advantage of it. Gold level is filling up fast. Silver, same deal. Titanium, I have several more spots open, but once we're sold out, we're sold out. And you may be asking yourself, why? Why do you limit your enrollment? The reason is that we're a boutique operation. I don't want 5,000 members seeking my support and assistance. I just can't pay that much attention. I have titanium level members that ask questions in the forum. I need to engage them as well. So I keep it on a limited basis at the discounted rate, so take advantage of it. It's closing up fairly soon. As a matter of fact, I think they'll end it tomorrow. And you should see in front of you the discount codes. This page will look different probably tomorrow or Tuesday. Have no fear. You are getting your discount. And if you have any technical issues enrolling, please let me know. Just email me, robert@thecontrariantrader.com, and we will get you set up. Okay, let's talk about some news that was announced over the weekend that is going to set the stage for a very, very volatile September. I have not been buying, let's go to the chart. I have not been buying this rally. I think it's a false rally. This is a chart, daily basis, the S&P 500, and you could see that we are consolidating. But what we need to pay attention to, folks, is now that we have the month of August in the rearview mirror, we need to take a look, and not a daily chart. The daily chart are for those who are not really serious about trading as a business. What you want to do is take a step back and take a look at the markets from a very, very high level view, a monthly view. And you can see that we have some real serious problems on this chart. This is S&P 500 monthly view. We broke down back here in October of 2018. And yes, we put in a higher high, even on a closing basis, but take a look at your RSI, Relative Strength Index. It is making lower highs. This is a negative divergence. I always teach members, the markets send you signals. This is a signal. This is a tell. And there are plenty of signals out there. I'm going to talk to you about them today, so bear with me. I beg of you, it's really important because the market is looking for a reason to break right now. And the reasons are everywhere. They just haven't blown up yet. And I'll tell you, when the futures markets open up tonight, being Sunday, I believe the futures markets are open tonight. The stock market is closed tomorrow, but the futures market should be open. U.S. slaps new tariffs on China. 1 minute later, China retaliates. So much for the Chinese calling us in the middle of the night or us calling them, whatever. That story is over and done with. Whatever optimism that you saw heading into the Labor Day weekend will now be gone. What other signals are out there that are telling us buckle up for a rocky ride in the coming months? The U.S. dollar is at multi-year highs. You may be saying, so what? What does that mean? Well, when you take a look at the U.S. dollar with gold overlaid, they're both trading in tandem. Take a look at history. Rarely does this occur. The last time we saw a real tight correlation between the U.S. dollar and gold was during the Brexit vote. What's going to happen on October the 31st? There's a possibility of a hard Brexit. This is a sign of fear when you have the U.S. dollar and you have gold trading in tandem. So we have Brexit. We have the trade wars. And frankly, what I believe is going to become more and more of a focal point of conversation is the tariffs that the Chinese are placing on the U.S. are directly focused on President Trump's core demographic, his core voter. If we see an Elizabeth Warren or one of these other Marxists get voted into office in 2020, folks, well in advance of that election, you are going to see the markets tank, just as they were doing when they thought Hillary Clinton was going to be the president back in 2016. You may not like the president, but the markets do. And that's a fact. They do not like socialists. This is not hyperbole on my part. They do not hide it any longer. What else is going on out there? Since we brought up gold, let's talk about it. So we have the U.S. dollar at multi-year highs. We have gold at multi-year highs. What else is at multi-year highs, if not all-time highs? The TIPS. Never heard of them before? These are Treasury inflation-protected securities issued by the Treasury as a hedge against inflation. The government has been telling us for years that there's no inflation. It's below 2%. We need more inflation. Why do we need more inflation? Nobody ever stops to ask these talking heads that come on CNBC from the Federal Reserve, hey, listen, why do we want more inflation? They just nod their heads in agreement with these so-called central bankers when in reality they're central banksters. They are robbing the middle class. They are destroying the middle class. If there was no inflation, why would the Treasury inflation-protected securities be ripping through the ceiling and at all-time highs? As I mentioned earlier, the markets send you signals. If you ignore them, you do so at your own peril. And what trades in tandem with the TIPS? Gold. So we have the TIPS moving to all-time highs. Gold in Aussie dollar terms is at all-time highs. And in dollar terms, once the dollar begins to break, you are going to see gold rip through the ceiling. Are you buying the gold miners? Are you buying gold? Are you buying silver? We have been long of the NUGT. Going into the year, our position in the NUGT is up over 130%. Now, we've added more to the NUGT trade since January the 1st, so we've diluted that position in terms of price performance, but still, we are up huge versus the S&P 500. Take a look at the price performance here. The S&P 500 for the month of August was down 1.81%. Gold was up 6.37%. The GDX, the gold mining ETF, was up 12.68%. The GDXJ, these are the junior miners, they were up 9.35%. And our NUGT trade for the month of August alone was up 38.13% on the month of August alone. Do you have exposure to any of these names, or are you buying Google, Facebook? Here's Facebook. I've been warning about this company for months. It's doing nothing. Maybe it'll break out. Maybe it'll break down. Google, in the crosshairs of the Department of Justice, has done nothing. Most recently, it put in a new all-time high back in April, but it was unable to close there. This is dead money. It's been dead money for a while. The indicators, the RSI is looking okay. Stokes are rising. Maybe we'll break out. Maybe we won't. I wouldn't buy these shares. Too much headline risk. The UGAZ, which has been in a bear market for years now. Did anyone take notice? Did anybody call you up? Did anybody bring it to your attention the fact that we flashed a bullish reversal bar in the month of August? We noticed. We were buying. None of these guys on CNBC are going to bring this to your attention. Now, I want to get back to gold for a moment. Why is gold ripping through the ceiling? Why are the tips ripping through the ceiling? Look no further. They're finally beginning to discuss this. From Zero Hedge, something's fishy about America's official inflation data. No duh. Right? That's about as technical as I'm going to get. When confronted with the Fed's claims that there's no inflation in the economy, most Americans don't have a PhD in economics, neither do I, would probably react with a mixture of confusion, frustration, and disbelief, in my case, laughter. There's an opportunity here, folks. They're finally beginning to wake up to the lies that is being told to us by the financial news media and by the central banksters. There is inflation out there. I've just pointed it out. Gold is ripping through the ceiling. The tips are ripping through the ceiling. Silver, the gold miners are ripping through the ceiling. Why? It's in response to fear and inflation. The Fed likes to treat inflation like it's a giant mystery that can't be cracked. These guys are just so out of touch or just completely corrupt or a mixture of both. Either way, none of these guys, none of these central bankers has called a recession. They're in denial about it right now. All you need to do, folks, is pull up the charts. I beg of you, that's all I've been doing is pointing out the cracks in the foundation using charts. And the cracks in the foundation are the lies that were being told by the federal government about the health of the overall economy, that there's no inflation when there is. And all you need to do, if nothing else, is take a look at the yield curve, 2s versus 10s. We closed out the month of August inverted. Spot 1.3 is the spread, negative spread. We broke down below the lower band of support. This is the day after Fed Chair Powell cut rates. And what happened to the yield curve? It collapsed. Since 1955, only twice has the yield curve inverted. And we have not been in recession within 18 months. All you need to do again, if you're using stockcharts.com, just type in $YC2YR. That's the symbol. Save it to your list. Now, does this simply mean that you need to go selling stocks? No. Generally, the stock market doesn't begin to tank until after the Federal Reserve acknowledges that we are in recession. But they never, ever forecast it in advance of the recession or during the recession. It's always after the fact. So, folks, in closing, learn the charts. Join the Contrarian Trader. Let's ask the critical questions that the reporters in the financial news media should be asking but don't. And let's make money off of their lies. And for those that aren't willing to take the leap of faith of spending a couple of dollars per day, less than a cup of Starbucks coffee, to join the Contrarian Trader, you're not investing in yourself. And that's why I only want annual members at a discounted rate right now. And I'm only offering a few limited spots, so please take advantage right away. Join before we close out all of the open spots. Everybody enjoy the remainder of your Labor Day weekend and be well.